Today, I'm compressing 7 years of crypto investing experience into 9 practical rules to make life-changing money in this market. And whether you're brand new to crypto or have been here for 4 years or more, I can guarantee if you follow these, you'll be in the top 1% of crypto investors, the ones that actually make and keep profits during the bull run. I've been here since 2017, and I've learned these lessons the hard way, making and losing money fast. And when the asset manager of a $5 million trust asked me what's the secret to making money in crypto, I realized it was time to write this down. So grab a pen and paper and invest the next 15 minutes to transform how you invest before the bull run passes you by. All right, lesson number 1, crypto isn't a get-rich scheme. I know as investors look at the crypto volatility and they dream about getting rich, they think, oh, this is a really great way to get in and get out. And anyone who's been here for any length of time has stories of their own, or I've heard others get a 10x, 100x, or even 1000x. And I've got those stories too. I bought Cardano at 2 cents in October of 2017 and watched it go all the way up to $1 in January 2018, a few months later, just to watch it go all the way back down and not take any profit and eventually sell it breaking even. And I have a similar story for NEO and REN. And the truth is, few, if any, turn those fantasy gains into hard profits. And why is that? Well, because when you get those gains so quickly, it feels more like luck than skill and behavior. And beginner's luck breeds arrogance. You think, oh, it's just going to happen again. And then it leads you to start thinking, I need to find those 10x's, 100x, 1000x. That's what I need to be on the hunt on. But the truth is, you need the behavior, namely getting the right behaviors around buying, selling, and waiting, not really looking for those 1000x. And I'll tell you why this plays out so well in the rest of these principles we're going to cover right now. The first one, though, is perhaps the most important, that crypto has a 4-year cycle you can set your clock to. Every 4 years, the Bitcoin supply is cut in half. Every 4 years, roughly, there is a euphoric run-up where everything just goes bananas and you can take massive profits. And of course, every 4 years now, we have this debate about, oh, well, does the Bitcoin halving still matter? And can we still invest in the 4-year cycle? And every 4 years, those same people that are debating it are on the sidelines as the rest of the market runs. So here's what you need to know right now about that 4-year cycle. It exists. And until that myth is gone or the halving cycle is gone and no longer matters, which, Bitcoin doesn't stop halving until 2140, so that could be a while, you can set your clock and invest around that 4-year cycle. It's as consistent as a presidential election, and that gives you an opportunity to be able to invest, which leads to the next point. The goal of any bull cycle isn't to get rich. Hear that a second time. The goal isn't to get rich. It's to get resources so you can invest in the next cycle. So a lot of people will start telling you, oh, now it's the time to get 6, 7, and 8 figures. I'm going to walk away from this. But the consistent winners that I've seen, and the way I think about this now, having gone through a couple cycles, really ask themselves, what can I get from this? What can I harvest? And how can I reinvest that in the upcoming cycles? And that can be kind of hard. A lot of people will tell you, oh, no, I'm just in it to make profits. We talked about this sort of get rich mentality. But if you start thinking as generational mindset, it's a lot easier to stick around. And for me, it's always been easy. I was drawn to Bitcoin and the rest of the ecosystem because of the technology. And I know that sounds like, cliche. Everyone's going to tell you that's the way it is. But for me, that actually was the case. So it was easy to watch these cycles go up and down. Obviously, it's not great when you're losing money, but it's easier when you have a long-term mindset. So if you think about this as having the cycle, you're going to be here a while, and that what you're doing in any cycle is to have resources to reinvest in the next cycle, you start to change your mindset and think about how to actually invest that, which gets to the next point. Well, should I be in or out? A lot of people will talk to you about having a perfect entry, but during a bull run, it's better to be in than to time that entry perfectly. Timing isn't your best suit. In fact, it's nobody's strong suit in this market. The market is so volatile and can move at any point in time. And when we're in the bull cycle, that's exactly what happens. And here I'm going to share a picture from one of the famous Twitter accounts and influencers that talked about in December 22nd, 2023, about how we were most likely going to see a reversion and a reversal. Bitcoin was at the time trading, 46K or so, talked about going, first hitting 40, then hitting 30, then hitting 20. And if anybody was listening to this and taking capital off the table What happened then just a couple weeks later is that the ETFs went live. They watched as Bitcoin rallied, went all the way from that 46 area all the way up to 72K. And since it consolidated, never really going back down to 40K again. And at the time of this recording, it's sitting about 106K. So that capital they had on the side of the table waiting for that perfect entry is now worth about half of what it was before. So during a bull cycle, you really don't want to try and time things. You just really want to be in and be able to hold on, which gets into this next point. You really don't need to call the top. You really just need to take profits. Remember, the goal of the cycle isn't to get rich. It's to have resources to redeploy, which means you have to take profits, but you don't necessarily have to be at the top. And I'm going to share my own experience and the mistake I made. So during the last cycle, everyone was calling for this 100K top for Bitcoin. It almost seemed predestined. And this was going around many of the analysts, not just the ones that typically have these crazy outlandish calls for the top, but many of the more respected ones who seem to almost have this as a baseline, right? And I thought, okay, well, it's going to be that way. So when I was listening to people like Ben Lilly who said, oh, the market's getting a little frothy, or Philip Swift from looking into Bitcoin said, I think some of the signals are starting to say that we may be topping out. And when it was well before 100K, I wasn't really listening. So I wasn't taking chips off the table, thinking I had to hit the exact top of the market rather than saying I need to take some profits. But fortunately, I had one ace up my sleeve. You see, earlier in that cycle, I had allocated some of my portfolio to Jay, the AI agent that's trading my portfolio. And fortunately, even though I wasn't able to time the top of the market, it was able to get close enough to take some of those profits and then have capital that I could reinvest later on when the market and the euphoria kind of went away. I actually had some profits. It actually took profits from me. And this has now become a huge part of my trading strategy. I'll talk about that more as we get through some of these other principles. But again, it doesn't come down to timing the top and trying to get to the very top. You don't need to hit the top to have profit. You don't really need that. In fact, if anything, just getting some profits off the table is really the best way to go. And Jay can be a great way to do that. Which gets into the next question. Okay, so if we're talking about the tops and we want to be in the market, maybe I just want to wait bear market. Maybe that's the best time to buy. Well, not really quite right. So depending on when you're watching this, the bull cycle could still really have a strong run in front of it. I mean, we don't actually ever know exactly when these things are going to play out. It has a lot to do with global liquidity, has to do with the number of people coming in. The ETFs have played a huge role. So we don't actually know when that is. And as I said before, the best way to actually get those gains, you got to be in the market. So it's really more about timing where we are in the cycle and then buying the assets for that. And I know that sounds hard, like choosing the best asset. Well, choosing the best asset is a lot easy when you have a perspective for it, because if any of the bull markets before us have given us any indication, every asset, even ones that are very stale, can at some point be lifted up and see some pretty good gains that you can profit from. And to give you some example, just in the last couple of months before we record this, or at the time of recording, Dogecoin, NEO, and even XRP have done a really good run and given those investors some good profits, even though some of them may have bought at the very top of the market last time. So rather than get into all the details, we got a video from Ben Lilly. He can actually walk you through that exact approach for doing that. I'll give a link in the description. But that's what you need to focus on, is not necessarily waiting to the bear market, and not necessarily holding on to what everyone else is saying, but really focus on where we are in the cycle and buying the assets for those so you can rotate through that. Which gets to the next point, is once you actually have that strategy in place, it pays to be ignorant. You don't want to be chasing every narrative that you're going to see wherever you're getting your information. If it's on X or if it's on Reddit, ignorance is the best path forward, because now you have your strategy, you're following that. You don't need to be rushing and trying to find the next $1,000 X. Again, this is about trying to gain profits, not have absolute wealth at any point in time. And that's one of the reasons we even created the trading pit. Trading pit was this idea that we could have a neutral commentary on the market that anybody who's trying to be in the market and have some legitimate gains can take from that without having to be shilled the next 1,000X token. So tune into the trading pit, tune into something like that. Just avoid most of the market commentary. Which gets to the next point. Once you have your system in place, once you know your strategy, you have your long-term mindset, trust your system. All the principles I've talked about so far about create a system, right? You've got this long-term mindset. You're going to approach the 4-year cycle. You're tuning out the noise. You're using tools such as J to make your journey a lot easier. Once you have that in place, trust that. Don't veer from it. Don't think, oh, there's got to be something else out there. Trust the system. That is the best way for you to get the profits that you need to be able to reinvest on the next cycle. Don't feel guilty taking profits. You have a lot of people tell you, oh, you've got to take profits when it's at this range, or I can't believe you sold out so early. There's nothing wrong with taking chips off the table. Clearly, you want to have more resources so you can reinvest, but taking them off for whatever reason, using them, in near term for some needs, or being able to just feel a little bit more confident that you don't have all your portfolio exposed. There's nothing wrong with that. Be confident in that. So how am I approaching this? What exactly am I doing? Well, for the second bull cycle in a row, I'm using J to help with my portfolio. And a big reason for that is that J was the reason I had more resources to invest for this cycle. It took chips off the table. It helped with me not trying to time the top. It actually took some off. It held those through the bear cycle because it's always analyzing the market. And then when it was time to reinvest, it helped me do that. This is one of the reasons I talk about it so often, because I've gotten so much help from it. Do I have other, allocations in this cycle? Absolutely. And I've talked about them in a recent video. Namely, those are Bitcoin assets. I've got some ETF and I've got some MicroStrategy. But really, at the end of the day, Jay has helped me drive these principles. I've kind of offshored some of that, or outsourced some of that, emotional detailing. So I don't have to worry about having to sell and buy. I don't even have to really be thinking about some of the assets. It's doing that for me. It's helped me guide so that I can apply these principles and really build wealth over several cycles, which is exactly what I've been trying to tell people to do. It's all about the behaviors. You implement them, I can guarantee you'll be better off than 99% of the market. But let me know what you're doing in this cycle. I'm very curious if you've got a similar approach, or if you've got other principles you'd add to the list. If you haven't already, like and subscribe. We'd love to have you back here for more of the video, and definitely check out what we're doing on a weekly basis on the Trading Pit. Until next time, this is Marconi White signing off.